All right, so this is where we last left off. We did step 5, which is doing the unadjusted trial balance. Okay, we were successful at $15,549.67 on both debit and credit side. Okay, now the next step is to do number 6, which is to do your adjustment entries. So you have exactly 3 adjustment entries here. You have to adjust your office supplies, you have to do your periodic inventory conversion, and you have to do your depreciation. Okay, so let's go ahead and take a look at my journal here. Okay, and let's see. So the first one we have here is that you need to adjust your supplies, right? You have a total of $50 worth of supplies left, meaning you used up $15. So what accounts do I need to use in order to represent that I am adjusting and using my supplies?
K would be the supply expense.
Supplies expense, right? Good. Oops, supplies expense, which is account number 615. And where am I taking out these supplies from?
The supplies.
Yep, from the supplies account. Okay. And I'm going to go ahead and 105, put in a description to adjust usage of supplies. Okay. So how much did I use?
$15.
$15. So let's go ahead and plug that into my ledger. Okay, so here I'm already at the very bottom of my ledger here. So perfect. I'm at my supplies expense, and I'm going to go ahead and say used supplies. Okay, we're on page 2 for $15. Okay. Now we need to adjust my supplies because I no longer have $65. I have 50, right? So where is
Right.
my supplies? Accounts payable, cash, register, supplies. Okay? So again, I'm going to put in my date as August 30th, and I'm going to put adjustment. Okay? 2, and we're going to credit our office supplies by $15. So that should give you $50 left. Okay? Next one we have here, right? We need to depreciate 1 month's worth of the cash register. It has a 3 years life, no salvage value, and we're going to use straight line. Okay?
All right.
So again, we're going to depreciate 1 month's worth of the cash register. It's got 3 years life and no salvage value. Straight line depreciation. So you should have a depreciation table in here somewhere. Here you go. Okay, what's the method that what are we depreciating?
We're depreciating the cash register.
Okay, what method are we using?
Straight line.
Straight line. Okay, how much does my asset cost?
285.60.
285.60. Let's check that. So how do I find that out? I could go to my general ledger and figure it out right here. My cash register is $285.60. Good. Okay. So $285.60. We don't have any salvage value. We have the useful life of 3 years. And is the date that we placed into service? When did we buy my machine?
Ah,
Okay, let's take a look at my scenario. When did you
August
buy?
12th.
August 12th. So what does that tell me?
It went in August 12th. So you had to plug it up.
Yep, so in this case, you need to depreciate for the month of
August.
August. Yes, starting the month of August. Okay? So, how do I determine the depreciation basis for straight line?
It would be the depreciation basis of 285.60.
Yes, because we got the asset cost minus salvage value, which is 0. So that should give you $285.60. Okay, what's my per unit rate going to be? Or excuse me, what's what my depreciation rate is going to be?
Um,
1 divided by 3.
1 over the estimated useful life of 3. So what is that going to give you?
0.33333.
Good. So what should be my depreciation expense for the month?
$95.20.
Now, is that true? Can I depreciate for $95.20?
That's for 1 year.
That is for 1 whole year. I only want it for the month of August.
It would be $7.99. I mean, a 7.93333.
Good, right? $7.93. And if you want to fill out the rest of the table, you can. You don't have to because you just need the depreciation expense. So there you go. You got it for set. That means for the month of August, you're going to depreciate your asset by $7.93. So, what accounts am I going to be needing to use to represent this adjustment to my asset?
Uh, accumulated depreciation register.
Yes. And what else?
Depreciation expense.
Depreciation expense. And accumulated depreciation for the register. Okay? So again, I'm going to say to adjust depreciation for June. I'm sorry, August. Okay? So let's see. Keep putting everything as June. I'm still stuck with Coffee Cafe, sorry. So in this case, right, my depreciation expense account is $650. My accumulated depreciation for the register is $115. So you're going to do it for how much?
$7.93.
$7.93, right? Let's double confirm that. Okay, depreciation table, $7.93. Okay, so once again, let's adjust my ledger. Okay, so I got some depreciation expense. Cash register. Excuse me. PR2 for $7.93. Okay. And then you're going to go find your accumulated depreciation for the register. You're going to get, and you can say adjustment for August. For a credit for $7.93. Okay. All right, last journal for this page here is that you were given that at the end of the accounting period, you had a total of 18 coffee mugs left on hand. You had 18 total. So, where do you need to go?
You got to go to your inventory.
Good. You got to go to your inventory, right? I only made one purchase, one batch of inventory purchase. So in this case, you got 100 at $100 with the total freight of $25. So here you have a total cost of $125. Right? No returns, no allowances. So in this case, your total quantity is still 100 at 100. You have no returns or allowances, so that should give you
did.
For purchases.
Oh no, not for the purchase.
Yeah, we got it for the sales. Yes.
Yeah. Okay.
So in this case, right, 0 goes to freight and $25 go here for a total of purchases of $125. We already know no beginning inventory. So therefore my net purchase is 100. So that means my goods available is 100. Okay. $125. So here it says ending balance. How many units do we have left?
18.
18. So my assumption is I must have sold how many?
$82.
You sold 82 coffee mugs. So in this case, this one's straightforward because you only have one batch of inventory. We already solved for what the cost per item is. It's going to cost me $1.25 per mug because we didn't make any returns or any discounts. So in this case, right, I have $1.25 per mug. So what am I going to do here? Okay. How do I figure out how much each coffee mug, or how do I figure out the total cost of my goods sold if each coffee mug is $1.25 each?
So it would be $77.50.
Okay, I did not get that. You did 82, right?
Yeah.
82 times a dollar 25.
Mm-hmm.
All right, go ahead and punch that in the calculator again.
Let me try to put it in.
Because it has to be more than $80. Because they're a dollar each.
Okay, 102.50.
Okay, 102.50. All right, and if I have 18 units left at $1.25, how much should that be? What's my ending balance?
Okay, 18 is 22.50.
Good, right? Excuse me. All right, so for selling 82 coffee mugs, it cost me 102.50. My ending balance is 22.50. So, what do I do with this information? How do I do my conversion entry? How do I do my conversion entry?
So you're going to do cost of goods sold
Cost of goods sold.
and coffee mugs.
You're going to do your coffee mugs. So cost of goods sold is 506. And you said coffee mugs.
Yes.
Coffee mugs. Okay, account number 104. Okay. What else are you going to have here? What am I converting from?
Your inventory
What do you mean by that?
would be the coffee mugs.
Why would I be taking it out from my coffee mugs when I have nothing in my coffee mugs?
Okay.
Where did I originally put my coffee mugs? Okay, when I purchased my coffee mugs, where did I originally place them?
Purchase expense.
Purchase expense. Okay, so you're going to take that out from your purchase expense, and what else? What usually comes with a purchase expense?
The freight expense.
Freight expense. Okay, good. So purchase expense 605, freight expense 601. Okay? So how much was my ending inventory balance?
$22.50.
$22.50. And how much did I sell?
82.
You sold, that's quantity. You sold 82 cups, but how much did it cost me?
$102.50.
$102.50. Okay? How much was my purchase expense? How much was my purchase?
$100.
$100. And how much was my freight?
25.
So 125. If you add this up, it should give you $125. Good. Okay. And I'm going to make a note here. Conversion entry for periodic inventory. Okay. We had an ending balance of 18 mugs. and we sold 82 mugs. Okay. All right. So let's plug our numbers into my inventory worksheet. I'm sorry, my general ledger, because I already did my inventory worksheet, right?
Right.
So I acquired some coffee mugs. Excuse me. Some coffee mugs, right? How many do I have left?
18.
18 mugs. Okay. At $22.50. Okay. Next account I have is cost of goods sold. Here you go, cost of goods sold. How many did I sell?
82.
Sold 82 mugs, which was a result of 102.50. Okay. And then we no longer have a freight expense, right? Because we converted it. So freight expense, I'm going to go ahead and put adjustment for the $25 credits, because we took everything out of the purchase and freight expense and we distributed them to the inventory and cost of goods sold. Okay. Last but not least, we need to also adjust my purchase expense for the adjustment for that $100, because we no longer have it. Okay, so it's 0. Right? So that means we are done with my entire scenario, including all my adjustments. So now that I completed step 6, we need to complete step 7, which is doing the adjusted trial balance, so we are able to complete our so we can complete our financial statements. Okay? So what's the difference between my unadjusted and adjusted trial balance?
Okay, with the trial balance, it gives you your debits and credits that must be equal, and your adjusted trial balance is the one that we're doing to show the adjustments made
Right.
for the trial balance.
Correct, right? So therefore, I'm going to go ahead and, to save some time here, I'm going to go ahead and copy and paste my unadjusted trial balance, and I'm just going to add in my accounts here. So I'm going to go ahead and click delete. And what I'm going to do is I'm going to make a copy of the unadjusted trial balance. And I want it right before my income statement. Okay. And I'm going to call this my adjusted trial balance. So all I got to do is I got to change the names here, because this is the adjusted trial balance now. Okay? So I have all the same exact accounts that I had previously. Only difference is I'll be adding extra accounts, and I'll be
Deleting.
So in this case, let's take a look at my ledger. Okay? Ledger. Okay? Did my account in my checking change?
No.
No, it's still at 11,199.21. Okay, what about my cash?
It's still the same.
It's still the same. What about my accounts receivable? Don't have it. My coffee mugs. I have coffee mugs now, right?
Right.
So I need to add in my coffee mugs. So adjusted trial balance. Okay. I need to add in my coffee mugs. Coffee mugs. For how much?
Was it 22.50 or for 100?
It was the $22.50, yes.
Okay.
Actually, I can open up this full screen now. Okay. So here it is for $22.50. Okay. What about my supplies?
It changed.
It changed, right? It changed from 65 to 50. So therefore, I need to change this to 50. Okay. What about my cash register? Is that the same?
No, it's depreciated.
Well, in this case, can you decrease the value of your asset?
No.
No, that's why you have to create a contra account, right? Which is
Okay.
the accumulated depreciation. So in this case, I do need to add the accumulated depreciation, but yes, my fixed asset is still at $285.60. I just
Okay.
need to add that $7.93 on the credit side for my adjusted trial balance.
Mm-hmm.
Okay, so cash register, insert a row here for the accumulated depreciation for the register. Okay, which was $7.93 credit, right?
Mm-hmm. Yeah.
So then let's see what's next. Okay, I don't have accounts payable, it's 0. My sales tax payable, is that the same?
Yes.
All right. My business loan, is that the same?
Yes.
Yes. Equity, don't have any. Income summary, not yet. My sales,
Still the same.
still the same. Sales returns and allowances. Oh, I have a cost of goods sold, so I need to add that into my trial balance, right? That I have a
Right.
cost of goods sold for $102.50. So right in front of right above freight expense, I'm going to have insert a cost of goods sold, right? For $102.50. Okay? So let's see what's next. Okay? Do I have a freight expense?
No.
Nope, gotta zero that out. And same thing with the purchase expense, right?
Mm-hmm.
My freight and purchase expense are zeroed right now. Okay, so I got 0 here and 0 here. Okay? Let's see what's next. No purchase returns and allowances. Rent expense,
Still the same.
still the same. Now I have office supplies expense. Right?
That is
For 15.
$15.
Okay. So I'm gonna add that in here. So let me see. Is this part of my formula? Yes, it is. Awesome. So let me see. I'm gonna insert 3 boxes in here. Okay, so the first one is supplies expense for $15. Okay. And what else do I have in here?
Depreciation expense.
I got my depreciation expense for $7.93. So, depreciation expense for $7.93. And guess what? I evened out at $15,557.60. Okay, so all I actually really did here was just add this accumulated depreciation.
Yeah.
Yep. And I just transferred from one account to another. So in this case, I panned out evenly, so I can now go ahead and proceed to my income statement. So I'm on step 8 now. Okay. Now, what is included in my income statement?
All of your operating income.
So, what is an example of an operating income? Sales, right? So in this case, I'm going to take my numbers from my adjusted trial balance. So I had sales, right?
Right.
How much was my total sales?
$509.15.
Okay. Now, what also affects my sales? Okay, wrong box. What
Your
affects
taxes.
not taxes?
Um.
What affects my sales? So let's take a look. What affects my sales?
Uh. hmm. Would it be sales returns and allowances?
Absolutely, because it decreases your sales, doesn't it?
Right.
Yes. So in this case, yes, that is correct. Sales returns and allowances. It decreases my sales by how much?
1793.
$17.93. Okay, good.
97.
Good. Now, that is all that I have for sales, right? Because everything else, let's take a look at my adjusted trial balance. I got sales, sales returns, allowances, and it goes straight into my expenses. So in this case, that's all I have for that one. So what is my total sales here then? If I sold $509.15 and I refunded $17.97, how much is my total sales?
$491.18.
$491.18. Okay. Now, what costs are directly correlated to my sales and inventory? What expense?
Freight.
I don't have freight right now. What direct cost is related to my sales? No. So remember the matching principle, right? If I'm generating revenue, what is my direct equal cost or expense that I have to match my revenues with?
Cost of goods sold.
Cost of goods sold. Okay? Because remember, if I sold 82 cups, right? Even though I sold it for $5.99, how much did it cost me to sell it? That is what is a direct cost to your sales. So in this case, you have a cost of goods sold, right? How much is that cost of goods sold?
$102.50.
$102.50. And because it's a cost, you're going to subtract it out, right? You're going to subtract it out from your total sales. So in this case, that will give you a gross profit of. So gross profit is going to be your sales of $491.18 minus out that cost of goods sold for $102.50. So what is your total?
$388.68.
$388.68. Good. Okay. Now I need to list out all of my operating expenses. All right. So these are the expenses that I used or I spent money on to operate my business. Okay? So what would be my very first operating expense? Let's take a look. What would be my very first operating expense?
Well, it'd be rent expense.
It would be rent because my purchase and my freight expense are zeroed out. There's nothing there. So you can add it in there, but it's going to be a zero balance. What does that do for you? Nothing. It's zero. So in this case, my very first expense that I have for my operations is a rent expense. Okay? Now, how much was my rent expense?
$1,500.
It was for $1,500. Okay? Now, what is the next expense that I have?
Supplies expense.
I have some supplies expense for how much?
$15.
I have it for $15. Okay? And then last but not least, what's my last expense that I incurred?
Depreciation expense.
You had depreciation expense for how much?
$7.93.
$7.93. So tell me, what is my total operating expense?
$1,522.93.
$1,522.93. So I don't have any other extra income. So therefore, what is my total net profit / net loss? If I have a gross profit, right, of $388.68, and I had a total of operating expenses up to $1,522.93, which decreases my profit, right?
Mm-hmm.
Because that's the money I spent. What is my total amount that I have here?
So you're gonna be in the red of $1,134.25.
I incurred a net loss. Now, what happens to a net loss? Who pays for it?
We do.
We as in the owner, or we
owner.
as in the company?
The owner.
The owner's not going to pay $1,134. Who is going to?
The company.
The company is. So therefore, I need to carry this number into my equity, right?
Right.
So I need to determine what the value of my equity is. Well, what did I start my equity out with in the very beginning of the month?
15,000.
You borrowed that money, so that is a liability, not equity. Did you invest any dollar into your company?
I would believe the check for 12,000.
Okay, that was the money that you borrowed from the loan, right?
Right.
So
you don't have a beginning balance.
Your beginning balance is 0. Okay, so because you took a net loss, right?
Mm-hmm.
Because you took a net loss for a total of how much was your net loss?
$1,134.25.
Okay. Therefore, right? If you took a loss, I put it in the wrong side. If you took a loss, what is your new equity going to be?
The same as the loss.
The same as a loss, right? Negative $1,134.25, right? Because that's what happens to losses is the owner does not pay for it. The company
Mm-hmm.
pays for it, right? Even
Yeah,
though the
right.
company and the owner are one, in this case, the owner's not going to pull out or take out $5,000 and put it into the company because where did he get that money? He borrowed it from the bank, didn't he?
Right.
So where is he going to get this money to invest into his company? So in this case, any net loss will go against your company. And
Okay.
then but net income or profit, right? Net profit, you have a choice. You can either pocket that profit and take it as an owner's withdrawal, or you reinvest it back into your company. So you have options when you have profits, but when it comes to losses, you have to take it out directly from the company because you, the owner, are not going to pay for it. It's you're taking a loss to the company. Okay?
Okay.
Right? But that doesn't mean your company is not doing well. It just
Mm.
means that you just spent too much money. That's all that the net profit and net loss does tell you, right? Is
Right.
did you make more money than you spend? It doesn't say that you are in the hole or in debt, okay? It just tells you that this period of time, you spent more too much money than you earned. That's all it's saying. Okay? So now that I finished my equity here, I need to do my trial balance. Okay? So,
Mm-hmm.
my trial balance, what are my assets?
Oh, it would be your cash.
Your checking account first.
Mm-hmm.
All right? Checking account is a total of
11,199.21.
okay. Your next asset is
Your cash.
cash, which is currently at
2,356.89.
okay. Your total your coffee mugs, right? Is your next asset
Yeah, 22.50.
at $22.50. Okay. What's
Supplies,
you got your supplies, okay,
$50.
for $50. Okay. Now your cash register, you're gonna have to do a formula for this because what does the my cash register have?
It depreciated.
It depreciated. So therefore, it's on your books, it's going to reflect the book value of your asset. So this case you're going to, because it's a contra account, right? It's going to
Right,
be your 285 subtract your $7.93, okay? Because we're not testing whether my debits and credits match. We're testing my true amount of assets. And right now, if my book says that I depreciated my asset for using it for the month of August, right? That means
right.
in my books, it should show me that it's been decreased in value. Okay? So in this case, whatever $285.60 minus $7.93.
27, 277.67.
Good. And is that the end of my assets?
Yep.
Yep. Okay. So go back to your balance sheet and go ahead and calculate that total. Okay, so my total assets are going to give me
got 13,906.71.
I got 27 cents in my end.
Oh, okay. I see what happened.
Okay. All right. Now for my liabilities, I'm going to insert a couple rows here because I have a little more than just one liability in this one. Okay. So, what are my liabilities? What do I have that I owe?
Sales tax payable.
You got to owe the state for sales tax. Okay, so the right side's going to be your liabilities. Okay. So, how much do I owe the government?
40.52.
$40.52. Okay. All right. And how much do I owe on my long term liability for my business loan?
15,000.
You owe 15,000. Okay. So therefore, what is my total liabilities?
$15,040.52.
Okay. And then what was my equity?
Negative 1137.
Negative
34.
34. 25. So therefore, what's my total liabilities plus my equity? So in this case, I got 15,040.52 minus $1,134.25.
$13,906.27.
That's correct. And is this matching your accounting equation?
Yes.
Does your assets equal your liabilities plus your equity?
Yes.
And they do, right? At 13,906.27. Good. Okay. So now I gotta do my closing of the book. So step 9 of the accounting cycle. So I need to close out all of my revenues and all of my expenses to my income summary, right?
Right.
So therefore, let's go ahead and do that. Okay, so how do I do this? I gotta journalize my transaction based on all of my general ledger accounts. So in this case, let's close out my very first one here, which is going to be my revenues, right? So how do I close out my revenues?
So you're going to do income summary?
Income summary, does that go first?
It's checking.
Not checking, no.
I mean, cash.
No. You're closing out your revenues.
Right.
Cash is an asset. If I close out my cash account.
Okay, it's sealed.
Yes. Okay, now how do I close out my revenues?
So are you going to debit your income summary?
No.
I mean,
how do you close out your revenues? Just in general, how do you close out an account? how do you close out an account in general?
Okay, you're going to do sales. You're going to debit your sales,
You're going to debit your sales.
and then you're going to credit your income summary.
Correct, right? We're going to zero out all of our accounts for my revenue. So the very first account I have here is going to be my sales account, right? What's my account balance in my sales account right now? Well, hold on, let me get there. What is my account balance in my sales account?
Uh, 509.15.
509.15. Okay. So I'm gonna go ahead and close that out while I'm here. Okay, so 8:30. Okay. I'm gonna go ahead and put close. Okay, and we're on page 2 still, which means I'm gonna be debiting my account for 509.15. Okay, so that should bring my account balance to 0, right? Because that's
Right.
how we close out our revenues, by making the account balance to 0. Okay, so then what's my next account I have here?
Sales returns and allowances.
Sales returns and allowances. Now, what kind of account balance does my sales returns and allowances have?
A debit.
A debit. So how do I zero out this account?
So you're going to still debit the sales return and allowances, but your income summary will be credited.
No. Your income summary is still going to always be credited, but in this case, right, my sales returns and allowances already is a debit balance. How do I make this account balance to 0? It's a contra account, right?
Right.
So if I, for instance, if sales is normally credited, I have to debit the account, right?
Right.
So if sales returns and allowances is a contra account, which is normally debited, how do I close out this account?
We're going to credit it.
You need
again?
to credit it, yes. So in this case,
Okay.
I'll go ahead and do it right now. 831. We're going to close your sales returns and allowances for how much?
$17.97.
$17.97. So that should give you your account balance to 0. So
Okay.
$17.97. So in your journal, you're going to credit this account. Okay? Sales, returns, and allowances. Okay? For that $17.97. So therefore, that's all the revenues I have. So I also need to include the income summary, right? Because I'm closing them out to my income summary. Now, what amount am I going to put into my income summary?
Okay, you're going to.
Sorry, I'm looking for my income summary. Okay, so what amount am I going to put into my income summary?
$488.80.
$491.18. Okay, so 509.
Okay, I see.
Okay. Okay. So my note here is I'm going to close out all revenues to income summary. Okay? So that means I got to update my income summary for 49118. 49118.
Mm-hmm.
We're on page 2 still. And I'm going to, what did I credit my account for 49118. So therefore, I should have a credit balance for 49118. Okay? All right. So now that I closed out my revenues, what is the next thing I need to close out?
Your expenses.
How do I close out my expenses?
It's going to be a credit
You're gonna
balance.
correct. You're gonna credit every single account, expense account. So in this case, I need to at least put in my income summary first because this is what I'm going to be debiting my account for. Okay? So my first expense account is going to be, let's see, income summary, sales is 0, sales returns and allowances is 0. What's my very first expense account?
It says free expense, but we don't have that.
Okay, what else is another expense account?
Rent.
Okay, before all of that, you're missing one expense account.
Cost of goods sold.
Good sold.
Cost of goods sold is 100% an expense account, right? It's its own category.
Okay.
All right, so in this case, 830, we're going to close out my cost of goods sold. We're on page 3 now, which we're going to credit 102.50, which will bring my account balance to 0 for 102.50. Okay, so I need to journalize that. I am going to credit my cost of goods sold, which is account number, what was it? My account number for that was 506. Okay, 506 for a total of 102.50. Okay. Let's see, what is my next account that I am going to close out? Okay, what's my next expense account? Freight expense. Does it have an account balance?
No balance.
No balance. Same thing with purchase expense. So the next one we have here is purchase returns and allowances, nothing there. So the next one we have is
Rent.
rent expense. So let's close out the rent expense. Okay, 830. We're going to close the rent expense on page 3 here of my journal for how much?
1,500.
You're going to close it out for $1,500, which will give you your account balance of 0. So rent expense, 610. For $1,500 credit. Okay? So then, let's see. What's my next account? Okay.
Supplies.
Supplies expense. So again, 830. We're going to close out my supplies expense. Page 3 for how much?
$25.
15.
I mean $15.
Okay. Which will bring my account balance to 0. So again, supplies expense is $615. So I'm going to close out my supplies expense for $15. Okay. And the last account that I have left here
Is depreciation.
depreciation. So I'm going to close this account on page 3 for how much?
$7.93.
So that should give you your account balance to 0. Account number 650. 650 for $7.93. Okay. $7.93. So tally up your totals. How much is your total expenses, or in this case, how much are you going to debit your income summary for?
$1,625.43.
1,600. Okay. Equals sum. $16.25.43. You said.
Yes.
Okay. And I'm gonna put my note here. Close out expenses to income summary. Okay. All right. So now I need to do my very, very, very last account here, which is to close out my income summary for $16.25.43 on the debit side. Income summary. Income summary. Income summary. Income summary. Today is the 30th. Close out expenses. Okay, page 3 for $16.25.43. Whoops. $16.25.43. So therefore, what is my account balance now?
It should be 0, right?
No. How is you have an account balance of $491.18, and you need to subtract $1,625.43.
11.34 and 25 cents.
11.34 and 25 cents debit balance. So in this one, I'm gonna hide this formula real quick, or hide this amount here, so you can't see it because it's supposed to be a debit. Okay. So I have a debit balance of $11.34.25. And where do I see this number?
In my income statement.
In your income statement. So therefore, what do I need to lastly do? I need to close out my income summary too. I need to close out my income summary too.
To itself.
Why would you close it out to itself?
Okay.
So remember from my worksheet, right? Where does that net loss be taken out from?
It's going to be your equity.
You're going to take it out from your equity. So in this case, if I have a debit balance, that means how am I going to zero out my income summary?
All right.
Okay? I'm asking, how do I zero out my income summary?
So you're going to go to your equity?
You're going to put into equity, yes.
Yeah.
But I need to zero out my income summary first. I need to decide, how am I going to zero out my income summary? Because right now I have $11.34.25 on the debit side. How do I make this account balance 0?
So it's going to be we're going to do the 1134 on the credit side too, right?
Yep, 1134.25 on the credit side. So in this case, I need to journalize it first. Okay, so making sure you don't forget that there.
Mm-hmm.
You're going to journalize that you're going to credit your income summary. For 1134.25.
Mm-hmm.
Where am I taking this out from?
Your equity?
Your equity. So that means your equity is going to be debited. So if my equity is debited, what does that tell me?
That you're at a loss.
That you're going to decrease. Correct. You're at a loss for that account, right? Because you did lose money, right?
Right.
So equity is 300. So that means you're going to decrease your equity by $1,034.25. Right? I'm going to put to close out to equity. Okay? And that's where you're going to finish up your ledger here. You're going to credit this because you're going to close out your income summary. On page 3 here for the credit balance of 1134.25, which will give you a 0 balance. And therefore, you're going to debit your equity. Oh, I just passed it. Equity is above, above equity.
Mm-hmm.
It's the 30th. And we closed out income summary for that on page 3 for the 1134.25. So therefore, you have a debit balance in your equity account for 1134.25. And what does a debit balance mean in equity?
That you took a loss.
That you took a loss. Excellent, right? That you're worth negative money right now. Okay? And then the last but not least step is to complete the post-closing trial balance, which once again, what I taught you to save extra time here is I just simply take a copy of my balance sheet, all right? All right, and I click move or make a copy. I want it at the very end here, and make sure you select create a copy, or you can copy and paste whatever one you want to do. So here, I'm going to call this PCBTB. And I'm going to call this my post closing trial balance here. I'm going to call my left column my debits. I'm going to call my right column my credits. And I'm going to remove things like this row right here where it says assets. I'm going to remove that because I don't need that in there. I'm going to remove my total assets right here because I don't need that in my trial balance. I'm going to get also rid of my liabilities because I don't need that title there. And I'm going to get rid of all of this. I don't need my total liabilities. And I don't need my total liabilities here either. I'm going to go ahead and put total. Okay? And that's where you're going to go ahead and fix your equity because it should be positive. Oh, no, that's right, negative. So a negative is going to be a debit balance of 1134.25. So you do need to fix that part right there. And then you're going to do your sum of your balances one more time to get the correct debits versus your total credits. Okay?
Mhm.
And you should get the same exact number, $15,042.52. Okay? And that is it for the final exam. So you're going to get in a similar situation scenario, right? I already read you what the scenario is. You guys are going to assume you guys are going to be a little tiny photocopy center. I've already told you that you guys are going to be given $25,000 to invest into your company. Okay? So from there, you need to be able to know how to journalize your transaction properly, meaning making sure you know how to use your chart of accounts, use the 7 steps of transaction analysis. You need to be able to go through 10 questions. So it's very similar to this exact scenario, right? Where I give you a whole bunch of different situations and you need to be able to identify and to be able to journalize it, meaning choose the most accurate account to journalize it. Okay? Then again, I will be testing you on the unadjusted trial balance. Okay? Knowing adjustments. Okay? And then, of course,